In today's video, we take a look at everything to do with the stock markets, crypto markets, and commodities markets right now. And boy, oh boy, do we have some opportunity coming into all these markets across the board. The stock market recovered from the recent volatility. The crypto market is putting in an accumulation base on Bitcoin, and commodities are possibly just getting started. Stay tuned, guys. This is going to be a great video. See you soon, community. All right, everybody. Well, welcome back to our market recap for the market close 11th of January 2022. And when we're taking a look at this heat map of the S&P 500 large companies, you'll notice it was mostly a sea of green. And when it was green, there were some great outstanding positions. It looked like the market moved back into hyper stocks a little bit. We had AMD moving up 4%, PayPal 4.68%, Tesla stabilizing after that great day of return, and things like Amazon and Apple also coming back with some great gains. And a lot of this was due to the fact that every market was up. The Nasdaq led the charge 1.43%, and after a little bit of sell-off in the first hour, remember this is where retail generally trades a lot, we saw that huge rally and stabilization for the rest of the day. It wasn't like Wall Street wasn't holding the position. They were buying that hammer or pin bar from the previous session off the 20 exponential moving average on the S&P, and they were pushing them up. And it was great to see because this is exactly what we expected to happen once we hit those big support zones as a community. XLE, energy, big breakout on oil. We'll be taking a look at later on today's video. It came up 3.4%. Something we looked at yesterday, jets, the airlines continuing to do okay. Maybe that's an area that's been beaten down and may look better in 2022. We discussed that. And then we had most of the growth kind of sectors coming back. It was really more the utilities, the consumer staples, things like utilities, consumer staples, industrials, healthcare that weren't doing as well for the session. And this is also consistent with Wall Street moving back into growth for that session and hopefully now for the rest of the week. We've got some good options positions as well to look at on the S&P 500, showing us a little bit about Wall Street and what they're probably going to be trying to do for this Friday's expiration. Guys, volatility is clearly here though for the start of the year. And I think that even though we're getting this recovery, we need to look at the stats over the last 20 years. If we look at 20 years worth of stats, what tends to happen? January into March, we reported on this, can be highly volatile. Now, of course, this is skewed a little bit due to the pandemic, but we do need to remember volatility January to March can occur. It's more of a trader's market over this period a lot of the time. We also usually have that September, October, November volatility, and we know that's been quite consistent over the last couple of years. Another thing to point out is while technology is improving right now, it does tend to have that kind of weakness through the Jan, Feb, March or sideways action. And just remember, in the back of our minds, we will be aware that February is the worst performing month of the year for the Nasdaq. So while recovery may be happening, we still could be stuck in a big zone, which we'll talk about soon in the video. Let's move into the inflation concept though, because everyone's talking about this. We know that inflation is the big story, or interest rates now is the big story for 2022. And looking at the 2-year yield is going to be one of the big ones that people should be looking at. I would always check this out daily on our charts for 2022 because when we're looking at a 0.89%, this is basically saying multiple rate hikes are going to be occurring over the next couple of years. And when this is already priced in like this, we know the market expects multiple rate hikes. If this goes to something like a 1.5%, you better be watching out because the market will react negatively towards that. And conversely, if this comes straight back down, the market might be looking at a very positive thing for growth stocks. So watch this type of yield. Another one you'll be watching is the 10-year yield as well, because that has broken out to a new peak since the pandemic. We moved up to that 1.8% level. And if this gets above 2, I think a lot of economists will also be pretty scared, and possibly Wall Street may react at least initially negative towards this. Now, a lot of people look at it from high interest rates kill growth stocks. I don't think there's a strong correlation with that over the longer term. Initially, it might impact a little bit, but if you actually look at returns, high interest rates haven't tended to stunt the Nasdaq as much as people expect. So just remember in the back of your mind, contrary to what people popular believe, have a look, compare them on TradingView, put the 10-year with the Nasdaq. Possibly we'll do that in the next video because they are different to what we might expect when it comes to the market. Let's move over to some commodities before we get stuck into the stocks and crypto markets. Gold improved. It went up to 1820. This is a good level for it, but it's no 1830 breakout yet. For gold traders, it's the same thing as the previous sessions. We're looking for it to breach and close above these levels here, 1830 and the rejection candle. If we get past this, what have we done? We've effectively stopped the shorters and they have to start covering, and we should see a bit of a squeeze and hopefully participation to that next zone at 1870. US oil, very similar as well. Great breakout here in the continuation of our bullish trend. A lot of people were doubters and haters on oil. We never doubt. 2021 oil possibly was one of the most technical trades out there, and the channel and the community here, you guys smashed it. So it was really great to see. And oil looks like it could be setting up here for a movement back up to the 85 and putting pressure on this top end range. We know that a lot of people have been going and seeing family members, and even the Apple Map stats that we were reporting on, they're up something like 100% year on year for good reason in terms of how many people are out in just the US. And this is happening across the world as economies partially reopen here. The demand is high. OPEC, of course, restricting still. And this is causing this big movement up. Just remember with oil, the big deal here is 85. If you breach past 85, then we start to talk about the next zone. And the next zone is somewhere around that 92. Previous supports over here becoming resistance. So it looks like this thing could be going bullish. Some buyers may be looking now for a pullback back down to something like this level here, back to the $80. So it's 81.62. We get a pullback, possibly some buying here, and then entry hopefully up to the 85. Oil looking strong for now in the markets. Let's move over to the stocks. We'll start talking about Tesla. And boy, oh boy, Tesla has been a good trader's stock. A lot of people, comments were screaming, Tom, is it an inverse head and shoulders leaning towards? So they're basically going left shoulder, head, right shoulder. Well, guys, yeah, technically you can have it. It doesn't really matter the way we want to look at it. So they're saying that if it breaks, it's going to go massively bullish. The key here is whether you look at it on as a channel or you look at it as an inverse head and shoulders or anything. If we do breach 1200, we know this is the zone now, guys. It's breached this so many times. 1200 hit, long leg doji, indecision candle. 1200 hit, then rejected. If you get above 1200, what do we expect from something like a Tesla share? Participation. Why? Because when Tesla breaks out of key zones, e.g. here and here, it goes on massive rallies. Here's the breakout of the previous high, a massive rally. The great thing about Tesla is that people hype it up, and it's a very heavily traded retail stock. So if it's managing to get past these key levels, that's a big sign. 1,000 still very big support, and at this stage looking at around that 1120 area as the next level of resistance. A breach past that should get us to 1200, and we'll find out who wins at this rate. We'll definitely be checking out the options next week as well to see what the options are telling us about the 1200 level, because I think that's going to be important here for the Tesla trade. Apple, similar. Big bounce. We know where the bears get control of this one. It's underneath that 167. If they manage to push it underneath the 50 exponential moving average, that will be a big deal. And Apple is currently stuck in a big range. So for buyers, they'll be looking towards that 180, 150 area, possibly some take profiting there. And Apple may even stay in a bit of a range for some time. But do remember the earnings report. It's only, 16 days away. So if we get earnings and Apple does really well, or it's starting to look like it's going to do positively, what happens? We get that buy the rumor into the earnings and possibly the sell the fact. We've detailed this in previous videos. Go and have a look at the previous yesterday's video if you missed it, and you'll see a full breakdown on that. Another thing that is becoming the story of 2022 is growth or hyper growth stocks. And we've reported on ARK. It's just a good example. It doesn't mean that ARK has the best hyper growth stocks. You may totally disagree with Kathy Wood, and fair enough. And we do know there's a lot of Tesla in here. But mostly across the board, this is kind of like a basket of hyper growths. So what's happened? They had a nice day, 2.76%. Some hyper growths were doing very, very well indeed. And we move towards that 89-90 zone. So around 90, we expect ARK to have some problems. It's basically gone down. It's hit kind of like a maximum pain or maximum despair area. If we then breach past 90, is that going to be a big sign? It's going to be a big step for it, because at the same time as you go back up, you'll be looking at going past the daily 20, something that's held it down. So let's say we meet both around here. 90 becomes the key level of resistance. It sells off and then it breaches past the 20. Once it gets past this stage, we may even have some form of lightning bolt scenario into it. This is going to be the first sign of strong recovery in hypergrowths. And I think it's exciting, and I think the community thinks it's exciting for 2022 because there is opportunity here. Another one that's got opportunity is something like the biotech industry. Very risky, no doubt. This is a scary, scary industry. Huge gains, huge risk. Some of you out there even like that. I think it's like an ETF in leverage on it. You guys are brave because it's very, very risky, as we know. But let's think about where biotechnology is in comparison to where it's been in the past. And this is the daily time frame. If we go back to 2018, 19, and even 2020 before the pandemic, the biotech industry almost put, 70% on after the pandemic and has given all of that back up and then almost some getting right back down to previous resistances becoming support. This will be an interesting point for us to watch over the next coming weeks, if not month, to see whether we can form some form of base around this zone, because the biotech industry is a strong one. It has some great future prospects in it. And while it hasn't done anything yet, it is on the role reversal. I think a lot of people sometimes underappreciate being able to go through the sectors, find the hidden gems, and then find potentially key reversal recovery positions. It's something that I like to do, and I always like to bring it up on the channel. If you guys enjoy this type of stuff as well, let us know in the comments down below, because if you enjoy us bringing up kind of key sectors we're looking at, or key stocks, and having like a stock or a sector of the day, let us know. If it improves the content, we're all about it here on the channel. And remember to subscribe as well. Support us, guys. It does really help out. We're going to get to 100K this year together, we believe. Let's move over to the Russell 2000. It's looking pretty good. I mean, if we think about it, our support is currently holding. This is very important for all of us. And you guys found that bullish hammer. You're very happy with it. It continued to follow through in the next session. Great strength here. We know where the key levels are though. 220 is going to be a bit of a resistance here for the Russell 2000. And then 226 is going to be the next zone. So if we get up 220, possibly some resistance selling, we move through 220, 226. And if we get through 226, happy days for Russell 2000 traders. That's like putting in a triple bottom or a massive channel, and the next move will be looking quite strong. And actually, let's take a little bit of the distance here, because what you usually want to be doing this is you take the distance, you extrapolate that distance out, and lo and behold, what does it do? It comes up and it equals the previous resistance. So this is meaning that the market's proofing. We love seeing technical proofing with pattern formation. So it could be great for the Russell. And this is an underperforming sector during the 2021 run. It's actually still at a price of January 2021 right now in 2022. So there could be some good stuff here for the Russell. Nasdaq came off the massive support trend line. We've used this now for many, many months. Guys, I'm going to call this the community trend line. Bears, you want to kick the market's ass, all you need to do is get it underneath your trend line, underneath this wick down here, and you're putting serious dents in the market, and you would think that the algorithms would get insane. The VIX would go above 20. That's what the bears are, of course, looking for. We're not really being biased when you're looking at a trend line, you're looking at strength here, but we do know that this is the big deal for 2022. If we breach this trend line and we breach it in such a way similar to getting underneath this trend line, it would be a massive, massive deal. Let's move over to the upside. We'll use the Nasdaq for this. And of course, what is this really? It's an ascending channel. So the great thing about this is not only do we know where the bears have got full control of the market underneath this, but we also know where we've got key resistances, e.g. up the top. And if we breach that resistance, where's the next level that we expect to go? Well, no surprises, straight back in to the top of the trend line. That would be where we expect to go. And I've actually looked around, and I think together as a community, we've come up with some great strategies for 2021. But 2022, this channel, or these channels that we're seeing, the ascending ones on the indices, they just make a lot of sense. And I think that's something that's really exciting because it gives us not only target levels, but also support levels that we've been finding and clear defined areas, which is all about what we're trying to do here with TA, to do with where the bulls and the bears are fighting it out and who is actually winning. The S&P 500 or the SPY here is exactly the same thing. We've got our top end trend line for the resistances and the potential profit, and we've got our bottom one here, which has been bounced off. And it gets better than that because of course we also have the weekly S1 pivot that just got hit. That's the monthly S1 pivot. We do use those in the S&P 500, and the weekly 20 exponential, another fantastic moving indicator that we've used quite effectively for the last couple of years to find key supports. Now, with the SPY, what's going on in the actual market? Do we expect this thing to continue up? Well, you would think with the current price action, there's certainly a good case for it. There may be some little bit of resistance around this 470 zone just because that was previous resistance. If it does breach past there, where do we go? You would think 480 and most likely above, maybe into the top of the trend line around that 490 zone. So the next 24 hours will be pretty important. We suspected the bullish action at this stage still looks quite bullish. There's no real signs of weakness just yet in the markets, but we will be kind of wary of this resistance because you can't ignore the fact that it did struggle with this zone many times before. So here is where day traders will be watching, depending on what occurs during the next session, whether we get a little lightning bolt down, we may even come test this and then bounce. We don't know that yet. And if we breach it, happy days for bulls, because that's going to be a big deal. Let's take a look at the options. So this is what we reported on in the previous video, the last day. 460 had huge amounts of puts on it. Check out how much of an outlier that put wall was. That was really supporting price this week. And as we know with a put wall, the market tends to not want to get underneath it and not expire underneath it and pay out these outlying areas. Now we've done another report still for the 14th, and look at the changes of what's happened. People have closed their puts on the 460 strike, or at least it's become a lesser strike. And there's been a huge increase here in the buy side as well. So the market will most likely stay between these two sides here, coming into the end of the week, coming into all of this big economic data, and you would not think that it's able to breach this round 480, I believe, or 470. I think it's 480 or 475. Have a look at Yahoo options if you want to see the strike here. And it's unlikely to breach that zone easily because that's where a huge amount of calls are. If this continues to move up and we continue to see a strengthening in this strike, even more reason that the market will most likely not want to go above that come the Friday expiration on the 14th. Let's move over to the crypto world before we discuss news. And the crypto world's looking way better, guys. Ethereum up there around that 3250. We know this is the key resistance. It looks like we might have put in a stop hunt down here. So this was a bit of a quick sell-off that got underneath the 3,000 target, would have stopped out a lot of people, fully reversed it, and it's actually what you want to see in these accumulation bases. If we then breach past 3250 and we start the participation, which could be really great, the next stop for something like Ethereum is going to be this 3600 zone. I mean, here it is, bam, 3600, support. That's where you expect the resistance. That'd be cool. Let's check out Ethereum in the next couple of hours today. Same thing for Bitcoin. And this is the one that really rides the market. 46,000 would be the participation. Previous supports becoming resistance. 43K, as we reported in the previous sessions. That's the key resistance here. We've closed the daily on it. Stop hunt? Question mark. I think so. Look how sneaky they were. Long leg doji. Kind of long leg doji, bullish hammer. Let's get past 43K. then we can start testing 46, and that would be a bullish signal here for the markets and especially for Bitcoin. And when you look at the 2-hour chart, it becomes more clear how good this accumulation base currently is. Let's see if it can get past 43K though. I hope it can. And it's always worthwhile checking out BTC shorts. Remember, you can type that in here and you'll notice that there is short positions, or there are short positions being currently put in the market. It's not at a concerning level yet, but if the whales continue to add shorts, we do need to pay attention to that. So watch BTC shorts over the next couple of days. If this thing just goes skyrocketing like it's done before, we need to pay attention to that, because each time it's skyrocketed, bad things have ended up happening to Bitcoin. So we must watch this level. Still very low, but if it got up here somehow and Bitcoin hadn't crashed yet or hadn't fallen off, we better be paying attention to that. In terms of calendar events, we've got core CPI coming out, of course, 8:30 a.m. just before the market open on Wednesday. Then we've got PPI data coming out Thursday. And on top of that, retail sales, core retail sales, 8:30 a.m. New York time on Friday. A lot of news coming out. This stuff can, of course, affect the market, though in general, most of these news events tend to have a very small effect, and it's the pack of all of them together that have that overwhelming effect. The market will price in a lot ahead of the time. It has to be a very different number from what the expectation is. So guys, if you enjoyed today's video, please remember to subscribe, smash that like button, and we'll see you in the next video. Bye for now.